So welcome back. I don't know if you saw my email. We actually won't have class next Wednesday or Thursday. Thursday being Thanksgiving, and Wednesday's Thanksgiving Eve. They're shutting down the school for them. So Tuesday will be our last advanced day. So just FYI. So we'll just wrap things up on next Tuesday. Unless you want to come here and have a Thanksgiving potluck.
You guys used to have the potluck.
We did. The COVID kind of shot that down. I keep kind of pushing, but see, what happened was they did say we could do potlucks, but it was early on, and so we never kind of really reinforced that and reminded everybody. So it's kind of thinking like, we got to make sure we clean everything out. Always pack out your own trash and everything, so there's no evidence that we had the potluck. But yeah, with COVID, so hopefully we'll get back to it at some point. We can have a virtual potluck. Everybody turn on your Zoom and everybody make a dish and then eat it. That'd be different. So, I mean, I guess that'd be possible. Last year I was playing around with my family and saying, with all this technology, you could do a Zoom Christmas party. And the way you could do it is everybody, you do the Secret Santa, right? They also call it the Yankee Swap or the white elephant game.
Oh.
So everybody gets a name, right? You could do that online by email. Somebody could just send them out. And then you buy a gift on Amazon and have it delivered to their house. They can't open it until the party. So then during the party, everybody takes turns opening the present. And so you can use Amazon as a delivery. So that'd be virtual. All right. So anyway, barring that, we are going to be working with our payroll today. So the way it works is in the online system, you actually have to activate your payroll. You don't have to put real names or anything in there. And definitely don't put social security numbers in. But we can use it. You're only going to be able to use it for like 30 days. And then they will remind you, you'll get an email that it's expiring. And if you want to keep it, you certainly can, but then there's a charge to go along with that. So for now, it's just going to be temporary. And when you're using QuickBooks, not every company will use it for payroll. So one of the options is, if you don't want to use QuickBooks, you can use another company. So they do have like professional payroll companies, and you can contract with them and then just hand everything up to them. And like in the case of QuickBooks, you can just import them as checks and things like that, or key them in manually. So that's an option. As I mentioned before, when you set up QuickBooks for payroll, they have an option for you to subscribe to their payroll service. And as part of that service, you get updates on all the payroll information. And I don't know if you've seen even like just the state of California's payroll manual. It's thick, still is. So they don't even send it out by paper anymore. It's all online. But it covers every possibility and all the things you have to do, including like workers' comp. So as you'll see, it's a lot easier to have QuickBooks do it for you. And then there are certain rules you have to follow while you're doing the payroll. Like if your employee has a lien against them, or where they're taking some money out of their account, then you have to pay that as the employer. And I don't know if it's still true, but it used to be true that if an employee has one attachment to their wages, you can't fire them for that. But if they have two or more, you can, because of the paperwork. Yeah, I know, it's one of those things that doesn't seem to make sense, but that's the rule. And like I said, I don't know if that's still true. But it can be pretty hairy, especially when you do get an employee that has two or more. And the way it works is different agencies get different priorities on how much they can take out. And then there's a cap that the total amounts removed cannot be larger than a certain percentage of the paycheck. With the idea being, you can't take it all, they'll stop working, right? Well, why work? I don't get any money. So you have to kind of divvy it out. Well, again, using QuickBooks's payroll system, if you subscribe to their payroll service, then they do all the automatic updates, and they also do those calculations for you. And that's really helpful. I don't know if you know this, but in a company, one of the most expensive activities is payroll. So employees, because you got to pay them, but there's also, as you're going to see, you're not just paying them a certain amount and withholding a certain amount, you're also paying to certain agencies on their behalf. So it's the employer's contribution to all these things. And that gets pretty pricey. And as you can see it nowadays, employers are getting desperate for people. So they're doing all kinds of things to hire them. But whenever times get tough, like they'll say, General Motors is suffering. And so they laid off 3,000 people. And you think, well, if times are tough, wouldn't you want to keep those people on to make more cars and sell them and make more money? Well, they're cutting back. They don't think they're going to sell that many cars. So they lay off the people to take less stress, put less stress on their payroll, which helps their bottom line. So yeah, it's one of those things, again, just keeping an eye on the news, that things change all the time. So what was it we were talking about yesterday? There's something else in the news about that kind of stuff. So to start up payroll, you click on the payroll tab. You can also go to new, and under employees, click payroll, and it'll get you to the same spot. So when you do it the first time, it's going to say it's not set up. You can go ahead and tell it to do so. And like I said, you can have 30 days to play with it then. I think it's 30 days, it'll tell you. But you do have to approve it to get started. And it'll just track it in here, and it's nothing official. So you can still work with the figures and things. It's just when you send it out or you hit submit, then it can be filed electronically. So if you're doing it for real, that's a good way to do that. So let's click on employees. So once you get that approved for QuickBooks, you should be able to get into the payroll section, and you will see that you've got all these things to deal with. And I have noticed that whenever we call this up, you're going to get a lot of hints for help. So QuickBooks is going to offer you other help, including a live technician to talk to about payroll issues. So I'm going to go to employees and add an employee. So the good news is this window is going to look very familiar to you. It's going to be similar to like our customer window. And it's going to work the same way. The difference, of course, is it's going to be an employee. So my employee's name is Ima. Her last name Worker. You'll see first name and last name are required. So you have to have some kind of first name in there. You don't have to have a middle initial, but you'll see those two pop up with asterisks, and that identifies it as a required field. Also, you don't have to put an email. One of the options Quick will give you is this one right here. Instead of you keying in their information about W-4s, you can select this. It'll send them an email with a link that they can fill out their information. Then they can do it for you. However, I'm going to turn that off. As a general rule, you got to make sure it's correct. Now, in this thing, when they're doing their W-4 information, it's up to the employee to get it right. If they make a mistake, as long as the form they filled out has been entered correctly, it's not your fault. And the only thing that really happens, though, is they can do either too much withholding or too little. If they do too much, they get a bigger refund after April 15th. And most people think, oh, that's great, without realizing that was money they could have had all year. So that's usually not a problem. It's the other way around, where they were expecting a refund and instead have to pay. And that's because their W-4, it doesn't describe them correctly. So as a general rule, it's a good idea for all employees to get a new W-4 to fill out in January of each year. Why? Because most places, January starts off the fiscal year, right? But people forget as they go through life changes that they need to go and now update their W-4. So if you do it to everybody, then it just becomes a routine and everybody has to look at it one more time. And things that can change are if they had a baby, that adds a dependent. If they had a student, a child leave and they're no longer dependents, they got married, they got divorced, they bought a house, they might change their deductions for those kind of things. So those are major life changes, and they can come with changes in how they do their deductions. So that's what W-4s are for. So one of the things I'm going to ask is for her hire date, I'm going to put her back to the 8th. So this is when she's going to start. So once you set this date, she cannot be paid before this. So that's why I backdated it. But that needs to be the starting date that QuickBooks is going to counter from this point forward. Here's one of the reasons this is important, is when she is hired, she is now under the laws as they stand on that date. And what I mean by that is, I think I told you before, when Congress and the state legislature pass their laws, a lot of times what they will do is say, this law shall take effect January 1st. So if she started working the week before January 1st, then she's under those the laws before then. If she starts on January 1st, or any work she does January 1st and later, she's under those rules, and they can be different. It's kind of depending on the circumstances. You'll see work location. We only have one location. That's the location of our business. If you have more, that can make a huge difference depending on the location. So you try to put that in there. One person told me about a circumstance where they had a business in Lake Tahoe. So their headquarters is in the California part of Lake Tahoe, but their employees work in the Nevada portion of Lake Tahoe. So they're subject to Nevada taxes, not California. So that one, you got to definitely make sure you get that right. So it's a majority where the work is completed, and you have to put that in there so that they can do the correct withholdings. So in our case, and in most cases, it's just one place. It's pretty easy. So the next question is IMA's pay schedule. So we're going to click on create the pay schedule. And it's going to come up with some options. Okay, so it's going to come up with every week, every other week. So it's bi-weekly. Twice a month, that's bi-monthly. And every other month, or pardon me, every month. For California, for payroll employees, you have to do it every 2 weeks or twice a month. If they are salaried, though, they can go monthly. You just pay them once a month. But hourly employees have to do that. One of the things they didn't put in here, which that'll be interesting to see if we get an update, is one of the incentives employers are using to try to bring people back into work is say they will pay you daily. So you don't have to wait for your paycheck, which a little perk. So, all it's doing is just processing it every day. Because it's all done electronically now, it's a little easier to do. 20 years ago, that would be kind of difficult, a lot of messy paperwork. But now the computers can do it, except you'll see, not quite QuickBooks yet. So maybe one day they'll do that if their employers demand it. So we're just going to say every week.
I think it's the commercial Chime
Uh-huh.
where it advertised, get your paycheck.
2 days early.
Yeah, X amount.
Yes. All right. So we're going to get into that as we start paying. What happens is you can run payroll before the actual pay date. And then depending on your company, what they will do is distribute it on the day that it says on the checks, but it could be all written ahead of time. In that case, what they're suggesting is you can get direct deposit. Direct deposit means as soon as we're done here, we click done, hit click, and it automatically goes out in the bank accounts. So that it avoids that delay of running the paper check, distributing it, going in the mail if you get your check in the mail, that kind of thing. So QuickBooks, you can do direct deposit. The downside of that is there's a charge. Now, the upside is some banks, I think Wells Fargo is one of them, will give employers a free account if they turn on their direct deposit. So the trade-off is, it's an account they'd pay for otherwise, but you get it back basically because you're doing this direct deposit. So that's an incentive you'll see. So our next payday, we're going to make it today. And you'll see the end of the next pay period. That's going to actually have to be on a Tuesday. Oh, by the way, you will hear the terms semi-monthly or bi-weekly. Well, the difference is if it's like in this case, they say every other week. So bi-weekly means every 2 weeks. So usually on a Friday. So every 2 Fridays. That means if you're in February, you may not have as many Fridays in a February. It's a short month. Where a longer month, you can end up with 4 Fridays. Well, that means 4 payroll checks. Twice a month or semi-monthly or bi-monthly is twice a month. So it'd be like on the 15th and the 30th or the last day or the 1st, depending on how they do it. So it doesn't sound like, well, why would that be a difference? Well, in February, say you're paid on the 1st and the 15th. That means you get 2 paychecks in February, no matter what. And then a long month like October, you're going to get 2 paychecks, doesn't matter. Now the paychecks will be different amounts. Even if you work the same hours every day throughout the entire year, there'll be different amounts because they're encompassing different time periods. Yeah, so just keep that in mind. Usually what'll happen is a company will set one time frame for hourly employees and everybody gets the same. But I'll tell you this, if you're, especially today, if you're applying for a job and, when you're being given a job offer, it's time to negotiate. And so some things you can negotiate, sometimes you can't, but you can try and just, be polite. But you can ask for things like, could I start at, I see you're starting at $20 an hour, I'd like to start at 22, given my experience. And they might say, no, you can't do that. Okay, so they just told you no. So the next thing you ask, if they can do it, they're probably more inclined to do it. So it's, give and take. So something you can ask in response to that is, I see you have medical starting at 90 days. Can we start it at 30? Bump that up. Or another thing is change your payday. So if you want to get it every 2 weeks, say, I'd like to get it bi-weekly. And they might say, yeah, sure, we can do that. We'll set it up in QuickBooks. And you'll say, great, I just took a class. I can show you how to do that. So you can set up a pay schedule name. So because we're doing this on Thursdays, because we don't have class on Friday, I'm going to just call it every Thursday. That's fine. And then you've got this option here to always use this pay schedule. So that's going to be the default. And that's fine. So like I said, usually you set up one for the entire class of employees, the hourly employees, and just leave it. So you can have more if you have a large employee base. You can put in as many as you like, but that could get kind of confusing. And what happens is if one employee tells the other, then all of a sudden everybody's mad because, hey, how come they get paid more than I do or more often than I do? So I'm going to click save. Now comes the fun part. How much do you pay Ima and how is she paid? So you see hourly, salary. So hourly is how much she's getting paid per hour. Salary, when you click here, it'll change so that you can calculate it by year or by month. So if they're making $50,000 a year, you can put in per year $50,000. This is usually at like an administrative level, and they do have to be careful about paying people salary. If it becomes obvious that they're skirting the rules for hourly workers just so they can make them salary, the employer can get in trouble with the state. California really on that kind of stuff. So it really basically it's a type of work that's being done. So a lot of times salary seems like you get paid more. The downside is it doesn't matter how many hours you work. So you can think, wow, I can get my 40-hour week done in 30 hours and I got the rest of the time myself. I get paid the same. Except these type of jobs usually require extra hours, but you don't get paid overtime. And that's the big difference. So if you're trying to say, well, hey, I make everybody's salary, I never have to pay overtime. Time and a half, that's expensive. Well, yeah, except then it becomes obvious that that's what you're doing, that you can't do that anymore. So, like I said, if I was doing this 50,000, oops, 500,000, that's a bonus. So then the QuickBooks will break it down, divided by 12. All right. Just as an example, I told the last class when we do a job search for graduates, we kind of keep an eye on the job ads. And one came from, it was the EDD department themselves. And they were hiring and they needed like an analyst or something. You want to guess how much they're paying? $65,000 an hour.
Oh.
Because what they did is when they were putting in the ad, their computer system does this thing too. And they said, oh, how much we pay? Oh, it's $65,000 a year. Yeah, nope. So I said, I'm going to go down there and apply for it. And then I want to tell them if they say, oh, that's a mistake, which I knew it was. Say, oh, truth in advertising, you got to do it. Mm-hmm. So that would be a good deal. I don't know anybody who's paid that, maybe Elon Musk or somebody. So you see the third option is commission only. So you can't really do that anymore in California, but theoretically, if you had just commissioned work, they get paid by piece, then they'll do that, right? So here, in California, you start running into, well, if they're commissioned, then wouldn't you be better off putting them as a contractor, 1099 contractor, instead of counting as an employee? So there are certain tests you go through. You ask certain questions. All right, do they do this? Like, where is the work located? Are you assigning the work? And then the answers to those questions basically determines where they should be categorized. So we're going to make her hourly. Now, in our case, as we make hourly employees, you can also add bonuses. So you can add commissions. So you can do a minimum wage hourly, and then they have performance bonuses. They get a performance commission. if they make a sale, things like that. So that's a possibility too. Okay, so here's the part where you get to make a call. How much do you want to pay your employee? I'll let you choose. You're gonna go $15 minimum. This is when everybody asks, so what's the minimum wage? Yeah. But that, especially these days, they think, oh, I'll just pay minimum wage. Well, somebody else is gonna come along and pay her $5 more an hour. Why wouldn't they quit? So that's the way it works. It's competition out there. And for a long time, people would hold a job and just keep it, just because inertia kept in that direction. They're comfortable, they knew what it was. But now with COVID shaking everything up for the last year and all the shutdowns, a lot of employees decided, I can actually parlay my experience and make some more money somewhere else. So I'll go 16. The other thing to do, start her at 15, and then at 30 days, tell her she's done such a good job, you want to give her a raise, even though you originally wanted to start her at 16. And then she feels like, wow, this is a good place, right? And then never give her another raise, but she'll still remember, in the first month I got a raise. So we did have like 4 students once get hired at a law office. And we used to put up the people who got jobs and how much they were getting paid. And one of them came back and said, would you mind not putting up how much I'm paid on the board? I said, sure, we don't have to, it's no problem. I said, you don't want to show it? And she said, no, I don't want everybody else to know what I got. She said, when they called me up, they wanted to start me at, say, 16 an hour. And I told them I thought I was worth 20 an hour. And they agreed. But the other ones who applied didn't do that. They're getting 16. And I don't want them to know I'm getting more. I said, well, why? They probably didn't ask. And that's what happens too, is a lot of times people get so excited they're getting an offer. You forget that maybe you could ask her. And she did. She got it. So she was afraid that it would hurt everybody else's feeling. And I said, well, they could have asked. So anyway, so when you do get an offer, and it doesn't have to be what they say, oh, we do 16 an hour. Can you do 16 an hour? You don't have to say, oh, I've never been so outraged in my life. How could you even suggest? You can just say, well, I've got a lot of experience in this field. Could you do? And then the idea is you're supposed to start a little higher and let them talk you down. So if you want 19, suggest 20. Could you do 20? And oh, no, sorry. 19? Yeah, okay, we could do 19. And then if nothing else, they still talk you back down to where you're going to start at 16, then you can take the job or not. So those are just little techniques when you're getting a job. So we're starting at 16. The default hours is how many hours a day she works and how many days per week. So what this is going to set up when you start doing the payroll, the computer is going to jump in a number. And actually the number will change if you start consistently changing it. But this is how it's going to start. So we're going to do 8 hours a day, 5 days a week. If she's part-time, then of course, 4 hours a day, 5 days a week. And you could have them work different shifts. And even if this is going to be the default, it doesn't mean you have to stick with it. So like if she's absent a day, it's easy just to change it when you're doing the payroll. You'll see there's additional pay types. We're just going to take a look at this. So you can add sick leave. You can add different types of, if your company has paternity leave, maternity leave, like that. If now, what was happening was they would offer sick leave, so many hours a month. People would accrue it. And then they'd say, hey, I've got this stuff I got to use. I don't feel like going to work today. I'm just going to call in sick. So they lie. Well, some employers said, well, I have them lie. Look, everybody's going to do that. Everybody wants that. So they make what are called like mental health days, or just take a day off day. And so that's additional one you can add. Then you can also offer vacation and things like that. When I left the county, the guy in charge of the computer department had been there 50 years. So they had a rule that if you had vacation leave built up at the end of the year, you had to take it in the following year to burn it off. Well, he kept applying for exemptions and kept getting it. And what would happen is, he was buddies with the person in the human resources department. He'd say, hey, I need an exemption. Can you sign this? Oh, yeah, sure. Well, they were checking, okay, let's see how much you got built up. So when he was close to retirement, he had like 6 months that had been just sitting there. He kept adding it every year. So they basically pay him full salary for 6 months to not show up. But they had to do it. And then that's when they, all of a sudden, this one person ruined it for everybody. They came out with a memo. From now on, there will be no exemptions for the rule, because they got busted on that one. So you can set up overtime pay if you're doing time and a half, double time, if you're doing a holiday pay. And like I said, here's where you can set up commissions. You can do time off policies, sick leave, vacation, and other things. Depending on your size of your business, there are some types of leave you have to offer. Like large businesses, you have to do the CARES Act and the family leave. So those are additional things. Small businesses are exempt for now, but that can change at any point. And once again, pay attention to the news and you'll hear about it, and watch QuickBooks, because QuickBooks will update itself if you have to do that. Okay, so the next thing we have to do is put in her deductions. So I'm going to click on add deductions. We won't do anything. We're going to try to keep it simple as a start. But if there's like, if you set up a retirement plan, 401k, and she's going to contribute to that, that would show up here, because you're going to take money out of her salary to pay for it. You can also see their garnishments, like with a court order. And you can set that up here as well. So that can be child support. That's a common one. And then any other type of garnishment they may have against them. So when it comes to the deductions contributions, you can set up retirement plans. And the reason retirement plans are attractive is because you're pulling the money out before it's paid to the employee. It can be removed tax-free for now, right? So that's what 401k. 401k actually comes from the law and the citation in the paragraph of section, law 401, section K. So if you look at it, it actually says it can be money that is not paid to the employee. In other words, it doesn't go to the employee and comes back to the employer. The employer does it before paying them. That can be moved over tax-free into an account. And it was an accountant who came up with that. And actually, it had been sitting there on the books, I don't know how many years, but I think it was in like the 70s or 80s or something. Somebody found that and said, hey, that sounds pretty cool, and set it up. And everybody else said, really? We didn't know you could do that. All right. So 401ks became a big deal. The advantage is it goes into an account. Taxes are not paid, so that it's like more money. So you got to figure, if the employee's paid, let's say they pay 30% in state and federal taxes. So every dollar they get paid, right, 30 cents is withheld. Well, if a dollar goes directly to the 401k, that's not 70 cents, that's a whole dollar. The downside for the employee, of course, is when they use it and access it, then it gets taxed. So that's why there's a lot of large companies will have these people who work on these 401ks. And it makes a huge difference if you think like taxes are going up next year, take out your 401k this year because your taxes are lower if you wait till next year. On the other hand, if you wait till next year and say, oh, I should have done it, wait a couple years because it might come down again, and then you take it out and run. So it just depends on when they need it. Same with health insurance. Health insurance premiums can be here. If, again, you have a company health plan, you can set it up to do withholding for that. And once again, because it's before the employee gets paid, it means there's more money basically, because there's no taxes taken out of it. So I'm going to close that because we're not going to do that for her yet. Now we have, what are IMA's withholdings? So this is a W-4 form. As I mentioned, it's one of the first things they give you when you start a new job is here. Please fill out this W-4. Okay, so the address, we're just going to make it up. 121 Main Street. asks for the social security number. So I am going to make that up as well. 111223333. There is no social security number 00000001. They're numbered based on the first three digits. Actually tell you where it was issued based on the zones in the country. And in fact, one of the concerns is they might be running out of social security numbers at some point. If you don't have the W-4 form, you'll see there's need a blank form, W-4 form. You can click on that and it'll open up a window to do that. You can also get it from the IRS webpage and just print it. This doesn't have to be any special printing. It just be a sheet of paper. And it's got the form and then the instructions. And the instructions, of course, are longer than the form. But basically, so you'll see the filing status, it comes from the first in there. So we'll make her single. Single or married filing separately. She could be married jointly, she could be exempt. Now exempt means there's no withholding. And an employee can take that option. The problem is, and they aren't responsible for all the taxes. So that's pretty rare. For the most part, it's going to be single or married. You'll see their claim dependent deductions. We're just going to make this up. There can be additional deductions depending on dependent status. And essentially dependent is when most of their income is the responsibility of the employee. So like children, unless you got kids who got jobs, then you're dependent. There is a funny thing that some of the kids, when they do like YouTube pages or channels and things, or even Instagram, they start making some money. Well, they make so much that really they're making more than what their parents are putting out as far as food and shelter. So really they stop becoming dependents. And it can be an issue tax-wise. They become basic, even if they're 15 years old. If the income is coming from another source, then that source is more what they're dependent on, and they become a dependent on that source. You can also set up extra withholding. And I think I told you about one of my friends who always put this, he always put like $50 extra or something. It's not a big amount, but they'll withhold it. And then what happens is when you file the taxes, you get a bigger refund. So I would tell him, you could get that money, open up a savings account, you get 2% interest or something. I put it in the savings account, and then at least you get some interest, and then you can use it when you need it. He said, nope, because I know I would spend it. If I got it, it was in my pocket, I would spend it. This way, I don't know. I forget it. And it doesn't come back until the 15th. And then I get a large amount and I can spend it on something I want. That's an enforced savings plan. I said, okay. You're giving the government a free loan, but certainly you can do that. So you'll notice here, the computer has figured out that we're in California. And because we said her work is done in California, she is subject to California state taxes. And so it's automatically done this for us. In the older versions, you actually had to select the state, which is no big deal. And then again, it's going to be carried over from the federal. So she's single. So we'll give her one withholding allowance, no additional amount. So the next thing is the payroll taxes, in addition to withholding. These are the ones that everybody pays. So like Social Security and Medicare, the unemployment insurance, the state disability insurance. So whenever you get your pay stub, you'll see all these on there. Most people, that's not what they look at. They look at bottom line, how much is the check worth? And then, but you can see, here's what you earn and here's what the check is. The difference, of course, is all these taxes and withholding. So there are times where you may run into somebody who's exempt from it, but it's rare. So Even tells you right here. So if they want to be exempt, you got to find out more. And the problem will be, up until now, everything they've entered, if they've entered it wrong, it affects them. But these right here can be a problem for the employer, because the employer also has a contribution to this that doesn't show up on the pay stubs. And most people don't realize it, that the employer is paying on their behalf. So if they mark themselves as exempt, for example, for Social Security, then what will happen is the employer won't pay it either. When it turns out they were not exempt, they should have been paying it, then the employer has to go back and pay it and backfill it. And that's a pain too. So that's one of those things. The employee claims it, say, "You sure? Tell me why." So QuickBooks does allow for it, but as it even points out, it's quite rare for that to happen. Next, you get the employee's personal details. This is not required, but it's handy to have in here. There are certain programs that can make a difference on people's ages. So let's make it January 20th, 1970. In fact, we've helped students try to get their student loans for their kids. And one of the things it used to ask was, how old are your parents? Okay. So then I went to a workshop and they said, we used to ask, how old are parents? And the reason we'd ask that is if they're senior citizens, the student can actually get more money because they're children of seniors. So it's a program. That's why they asked it. I said we had to change the question. We don't ask how old are you anymore. We ask, what is your mother's birthday? What is your father's birthday? Want to guess why? People are lying about their ages. And they only lied in one direction. They always said they were younger than they really were. So they didn't want to admit they're 70.
Yeah.
Saying, well, I'm 60 really at heart. So that's what they put in there. Well, what happens is by doing that, they might not fit that program. So by putting in the birth date, they just had the computer calculate, okay, what's their current date and whether they're eligible or not. So that's where you can get the birth dates in here. And here we come to our choice. We can pay IMA through direct deposit or paper check. For now, let's do paper check. Otherwise, you're going to have to enter all your bank info and everything. But this is where you could sign up for direct deposits. And then when you process these, they automatically come out of your checking account. You can still run the pay stubs or send them by email or however you like to do it. So they're still created. They just don't come out on paper, then you hand it to the employee. So we click done. All right, so we are at 6:55. We'll take a 10-minute break and come back at 7:05. We'll complete entering our tax information, and then we'll run our first payroll. And then don't print the check. See, we've entered the last gasp of the flies.
Oh, yeah.
So when they come in there all aggressive, they know their time's about up. It's going to get too cold. We walked into a classroom once, and it was in the night class. Turn on the lights, and I just happened to look up, and you saw these dots. It looked like a horror movie. And they were just sitting there. And then through the class, one or two would come down. But most of them just sat there the whole time. And my misspent youth in high school, I used to be able to catch them.
By hand.
Yeah. And then I'd open a book, toss them in the book, and slam the book.
Oh,
That's pretty cruel. Now I throw them outside, so I don't have to deal with the bodies. Somebody told me, and I've been meaning to try it. You take a plastic Ziploc bag, put water in it, and hang it by the door. And apparently, the theory goes, the sunlight reflecting off that attracts them, and they'll fly that way and fly out the door. Yeah, that or somebody just having fun and thinking of that. All right, so we're back. So the start of class, I said there was something that we talked about yesterday. And it was in the news, and it was credit cards. I remembered. It was in the United Kingdom and Britain. Amazon is telling Visa it's no longer going to take British Visa cards because they don't like their fees. Apparently, they're a lot higher in Britain than anywhere else. And so they have threatened that they're going to stop as of like January 1st or something. This hasn't happened yet, but they're threatening to do it. And in response, the British Visa says, well, maybe we just won't deal with Amazon anymore. So it's back and forth, but it was in the news just as we're working credit cards, and it was based on the fees. The fees that Amazon as a vendor has to pay for every transaction, they said was too high and unreasonable. So they're fighting it out in the court of public opinion too. And then Amazon, that's the problem with Visa is, well, there's MasterCard, but it's not as popular as Visa. But there are other cards now that can offer challenges to these major corporations. And they include cards where they're preloaded, things like that. So I'm tracing those. And there's basically gift cards, universal gift cards. So like I said, watch the news because stuff's always happening. Okay, so we go back to payroll. Let's click on the workers' comp policy. So every company has to have workers' comp. So when you click on this, you're going to get the offer that QuickBooks will offer to sell you or hook you up with a company that can offer workers' comp. Or you can tell it, yes, I'm covered. And if you click, help me add my policy to QuickBooks, it'll integrate a policy here. So that includes when you pay your bill, then you can do it through QuickBooks automatically. Or you can do like we did yesterday and just make it in a manual entry. If you don't have it, it's going to try to sell you something. California requires all employers to have it. Even if you're self-employed, you have to have a form of workers' comp insurance. So the downside is because it's all pretty much run by the state, there's not a lot of competition. So when you're looking at workers' comp policies, the companies won't find that if you go to company A, you're going to get a good deal, and company B, it's much more expensive. They're all pretty close to the same price. So I'll click yes, I'm covered, and next. And then we have to go and fill in your tax info. So this is going to be the company's tax information. So it's going to default to the information we set up in our company. You will see here that you could have the DBA name. So DBA means doing business as. And when you set up a company, you can set up the corporation name or the company name, but you can have different brands underneath it. And maybe you're doing business as a certain brand. So this has to be the company's official legal name, the one who's officially responsible for, in my case, Dan's Convenience Store. So it might be my name, Dan Garrett. I have to put that in there. And then I'm doing business as Dan's Convenience Store. However, if I register Dan's Convenience Store as a corporation, Dan's Convenience Store Incorporated or LLC, then I can use the company legal name here. And then it's going to ask for the legal address. And again, that can be different than your company's address that you're sending to all your vendors to send your stuff to. You might have a headquarters somewhere. So if you change it here, it does not change anything else you've done. This is just for payroll purposes. So like I said, if you did have a different base of operations, you can put that here. And then down below, you've got the sole proprietor, nonprofit 501c3 or other. So I'm gonna leave it at other. I think if I try sole proprietor, it's gonna make me change it, yeah. So if you wanted to, you could set up a sole proprietor, but then you gotta go and put your own name in. So we'll just leave it as other for now.
Is there another way to get to that screen?
This one?
Yeah,
Um,
because mine just wants me to connect to my phone.
really? It didn't ask for tax info, it goes connect. Oh, workers' comp? Are you on this screen? Here?
Yeah.
Okay. Say yes, I'm covered.
Yeah, because mine doesn't show up like that.
Let me see.
So I had to. Everything's been going good until here. Let's see, I don't have this on the side. So when I click it here,
Finish getting. Go ahead and click that. Down here. I thought it's was it that a verb like finish hitting quote now, or you're done and you're finished. Click that. Try and click and connect. That's what cancel that out. Nope. I fell up here. Let's try back again. Okay. Scroll down. We'll find out when we're in payroll. Because it's acting like it's already got it set up. So here's why. Let's just go through it and then we'll see if it works. When you're doing the tax info, if it's already set up, then it's going to assume it's got it set up. So maybe it is. That's what my guess is. We'll find out. That's different. So I've got my different information here, but you have to do an employer identification number. So if you're a sole proprietorship, this is your social security number. If you're doing a corporation or another company or a partnership, it's going to be a 9-digit number. So I'm just going to type in 1, 2, 3, 4, 5, 6, 7, 8, 9. Nope. Oh man. It's on to me. 11-345679. So it's a fake number, obviously. Just made it up. You get this from the IRS website. They're free. You can do as many as you want. You can do it and do nothing with it. It's just basically an identifier to identify your company, your organization. And it's either this or a social security number. If you are going to set up multiple companies, you can get different numbers. And again, they don't just go 8, 9, 10, 11, 12. They generate them in different ways. So as you're setting up your corporation, you can set up as a corporation, you can set up as a partnership. I will tell you that an accountant once told me that if you're setting up a new company, just like a little side business, side hustle, just to see what happens, it's better to do a partnership than a sole proprietorship, because they feel that if it's a partnership, then you're less likely to have shenanigans going on. Whereas a sole proprietor, there's nobody else looking over this person's shoulder. So like if for people who are married, put your spouse down and that can be your partner. And even if they're a silent partner, they don't do anything, at least it avoids that. I've never heard that confirmed or not, but it seemed reasonable to me, but who knows? So it's going to ask which payroll tax form. So if you pay quarterly, you're going to do the 941 quarterly. If you pay your taxes each year, you use the 944. That's not very common. You can see here it even suggests 941 is the most common. And then you can do quarterly, monthly, semi-weekly again, as to how often you're going to pay it. And again, this can be done electronically. We're going to say quarterly. More likely, though, you'll end up doing monthly because they like to get paid. And I'll click next. So then it goes to the state. If you're using a federal ID number, The state doesn't require you to have a separate number. However, if you did register with a state, you would have that. So it's basically the way we work in this country is federal first, state second. And I can't think of a circumstance where you would have a state number without having a federal number, because you're in the California is always in the United States. So it always have to be that way. So your unemployment insurance rate depends on a couple of factors, including your company size and what your company does. So the standard is 3.4%, but it could be higher or lower depending on the circumstances of your company. So you can override it here, but as a general rule, you're going to leave it the same. Then you got the employment training tax. We're going to put 0.1%. This is one of those things that if you had to do this manually, it's a real pain in the neck, because the way it works is the Employment Training Panel is a program by the state of California. It trains people, employees, to improve their skills so that California stays competitive amongst the world and other states, right? That's the theory, at least. They also train new hires, people who are unemployed. And actually, that's what started it, was doing the unemployed people, getting them trained to a new job and getting them employed. And we worked with this program. The way it's funded is $7 from every employee in the state goes every year into this fund. So it's really big fund, millions of dollars. What's happened though is, like with so many things, is large companies went in and figured out how to do it and got big grants and basically got money. So Amazon got it when they moved in to California. They got a big one. And so did Virgin Airlines. And then the Steven Spielberg's movie company. Because they really need the money, right?
Yeah.
But anyway, that's the way it works. They played the game. So the way this is funded, it's $7. But you'll see here it says 0.1%. So what it is, it's 0.1% on behalf of every employee up till it hits $7, then it stops. So, if your employees paid $50,000 an hour, okay, first paycheck, they're done.
Yeah.
It doesn't come out of the employee's paycheck. It's what the employer has to pay. So this is where it's going to do all the math for you. It's going to keep track of the increments. And usually, it's like 50 cents here in this pay period, 50 cents next pay period, until it hits $7. So whenever that happens, it tops up at $7 and stops. And then it's not paid anymore. So that's why it's sitting here. And again, you put 0 if you're exempt, but you wouldn't be. Most employers aren't. Okay, so the next option is to connect to your bank. I'm going to close this. Back to that. Tell me I left something on. No, I'm done. So I don't want to connect to the bank. I don't really want to have it going on my bank account. But if you are doing direct deposit, you have to do that before you can actually do your first payroll for direct deposit. So the other thing you can do is have your tax form signed with electronic signature. And again, that's required if you're filing electronically. I'm going to click on employees. And you'll see there's my employee. And it's currently showing active status. So I can click on the employee. At any point, you can make this person inactive. And it's if like she left, she got another job somewhere else, she got fired or whatever. You can make her inactive. You don't want to delete her because it would delete all the transactions that went along with her. So any employee that you hire, once you've done your some transactions with them, again, it's kind of like the customers and vendors. You don't want to delete them, but you can make them inactive. And then they won't show on your list, but the history will always stay there. All right, so you'll see in the upper right-hand corner, because I set it to Thursdays, my next payroll is due today. They do offer your payroll checklist. I'll kind of go through and make sure you got everything done. There is also a feature in QuickBooks to fill out timesheets. So you can do that too. And especially if they're hourly, they're going to keep track of their time and they have to be here 8 hours a day, 5 days a week. On the other hand, you can enter this manually. So I'm going to click on Run Payroll, and this popped up. So Olivia, did yours pop up?
Like you went to, I clicked on my general.
Yeah.
And it's going through the workers' comp book.
Huh.
And mine has a 6.2%.
For workers' comp?
Yeah.
That's interesting. See, I told it manually, so I have to key it in
Oh,
manually.
okay.
Yeah, but did you put any numbers for any accounts or anything?
No, I just went through real quick and I put that.
Okay.
Yeah.
Yeah. Okay. All right. That's good. So that you got it, because you have what it does to do payroll, you have to have that EIN number.
Yeah.
So you can also go to employees payroll. Now it should show up and let you run payroll.
So what was that?
The one I just used, I went up here into the new. This is where we have all those new items. And rather than going into the whole payroll section, I can go under employees and see payroll here and click payroll. And it takes me back to the same screen where I can set up her first paycheck.
Oh, okay.
All right, so the first thing it's going to ask me is where are we paying from? I am not paying our cash. I'm paying for my checking account. And it helpfully tells us the balance. You'll see the pay period. I'm going to use the drop-down list. And I'm going to go back to the 10th to the 16th. Okay, so then it puts the pay date here as the 18th. Now, if I am, see, theoretically, if she's working right now, she might still have some more hours, or she might take off early, and I might have to adjust it. So what I can do is I can change the date to tomorrow's date. And can do that. So you asked earlier, Olivia, about how they can claim to get your payroll 2 days faster. This is one of the reasons, because you're avoiding this hassle and it's going to go directly. So I remember one place I worked, they didn't use QuickBooks, but they used a payroll system, payroll company. And they Federal Expressed the checks to come every pay period. So it was on a Friday, or we're supposed to be on a Friday. The checks came on Thursday with a date on the checks for Friday. And everybody got it. They just handed them out. They're not thinking, yeah, it's Thursday. This is odd. So some of the employees got miffed. Like, well, so you mean you guys have had the checks the day before? And we could have gotten paid the day before instead of waiting for Friday? Because, we go to Friday on the bank. It's always busy. And so it actually caused some commotion.
Mhm.
But, even if you got it on Thursday, you still couldn't deposit it to Friday. Or not supposed to. Now, I will say, the banks are supposed to catch that. They don't always. So that can happen. And then that can really cause problems if they are cashed too soon when there's not that much money in the account, that money is being transferred in on Friday for the payroll to go through. So that's kind of dicey. But you can put any date you like. And you'll see, it says here she worked 40 hours. That's the default I set up when I set up IMA's status. So it's assuming 40 hours, all right? You can change this layout here in the table, and you can edit how much she's paid if you want to change it here. If I know she took an hour off, I can change it right here, 39, and then it does the updates. Now, you'll notice something's missing. This is her gross pay. So $16 an hour for 40 hours would give her $640. No deductions. That comes next. So down below, you should see review payroll. So it does give you an opportunity to go through those. If you didn't want to, you could save this for later and it will save it as a pending check, but it won't actually generate the check yet. But we're going to go ahead and preview payroll. So given the deductions I set up for her, she is only going to get paid $532.39. Now it doesn't list them. However, you do have the option to take a look at them. So let's do that. Preview payroll details. So it's stamped with a preview only in case you print it. But you'll see here on the left side, here's our withholdings for her. And it's for 2 weeks, so each week. All right, so about $40 is being withheld from her federal income tax. Her state's about 10. So those are standard withholdings. And you see QuickBooks has done this for us. Back in the good old days, before we had QuickBooks, these are the things you had to enter manually and always do lookups and things. Have a lot of patience for that kind of stuff. On the right-hand side, you'll see the similar headings, but different numbers. Here's what the employer's paying. I told you that employees don't get to see this part, but this is one of the reasons it's so expensive. See, the employer has to match the Social Security. So you're doubling the Social Security payment now. Plus they're paying all these others, the Medicare and everything else. So that's why employees are one of the most expensive things a business can buy. Now, if they're good employees, it's worth it because they're going to bring in money, but it's going to pay for all this. But that's why they are usually so reticent to hire, is because they know it's going to be a constant payment that they're going to owe over and above what they're paying the employee. So of the employees withholding of $107, the employer's matching $75.20. So my theory is, instead of having the employer withhold all this, they should change the law so that every employee in the country that gets one of these has to turn around and write a check for all these different withholdings. And they have to write 1, 2, 3, 4, 5 checks. And you watch what happens then. Because right now, the way it's set up, because the employee never sees it, they don't think about it. What do they think about? Oh, they don't think about the 640, they think about the 500 they got and how they're going to spend it on groceries. But if they got the 640 and had to write all these things, they'll start asking, what is this? What am I paying? What is this in state disability insurance? Do I really have to? Then they'll start asking questions. But that would never happen. So this will give you the preview of the check, the withholdings, and all the information that goes along with it. I'm going to close that. If I need to change anything, I can adjust it here with this little edit pencil, and then I can make changes. So it's wrong about 40 hours. If I want, I can change manually the federal withholding at this point. That's not a good idea because usually it's right. And basically, if it's not right, then it's going to be wrong all the time. Go back and fix the W-4. So you really shouldn't be changing too many of these. However, maybe the employee said, hold an extra $10 out this month. Okay. That would be my friend again, trying to get more back on April 15th. So you can make adjustments to some things. Other things you can't because they're basically built into the system. On the older versions of the desktop QuickBooks, you actually could. You could change any number anytime you want. So you have a few limitations here. But, you know, again, you could do it, but you don't really need to. All right, so in the bottom right-hand corner, we've got submit payroll or save for later. So if you do have a question about this check and you say, I better get back to it, but I don't have time right now, you can save it for later. It'll save all the work that's done to this point, but again, not generate a check. At the same time, if you accidentally use save for later instead of submit payroll, and you go to look for it, think, oh, why didn't it print? Where is it? Always check that, see if it's saved instead of submitted. But we're going to submit payroll. And of course, I get an ad in the survey. So I'm just going to close this. They want to know, how'd you like the payroll system? Oh, I want to write, oh, it was so fun. I'm not even going to Disneyland this year. I'm just going to sit here and do payroll because it's fun the way you guys have it set up. You know, so. And then there's the ad, not using direct deposit. It's faster, easier, more expensive. Oh, they didn't put that part in there. But they do say with your subscription to payroll service, you can get it done for free, but you're still paying. So yeah, they do this all the time on like the streaming services. It'll show you the different movies you can watch, and it'll say the category free, and then it'll say you have to pay an extra for these movies. Well, what do you mean free? I pay you every month, and it sure ain't free. It's costing me money. But you know, they don't want to say stuff you're already paying for, and then stuff you got to pay more for.
Yeah.
Yeah, that's no fun. So anyway, so it says free. It's not really free. You still have to pay them, but it would be included. So again, at this point, it still hasn't created the check. So it's still pending. You'll see you can print the pay stubs from here. And it pops open a PDF and creates a PDF. So if you are using like direct deposit, you can still run these and print these off. And that's a good idea. It is required that employees not only get a paycheck, but they get the stub to go along with it to give them the details. And then if I want to, I can add a check number here. I can still go back and view these payroll reports. So it gives you one last chance to change it. But I'm going to click on Finish Payroll. All right, says it worked. Let's see. I'm going to go to my chart of accounts. My checking account, view register. And there she is. Our first paycheck. And of course, when it says account, it says split. The reason it's split amongst all those different payroll deductions. So all those are combining to create and generate this 532.39 paycheck. Now, once you have a paycheck here, you'll see I have the choice to edit it. However, usually it depends on what the problem is. If it's a typo, you know, then that's easy to fix. However, if it's some kind of withholding is wrong, then you really don't want to edit it. You want to delete it and basically do it over again. Because what happens is once you start making these changes, then it can mess up your accounting. But you will see down here, you got choices to print, edit, delete, void. We had an employee once that got reviewed by the IRS. I don't know why he didn't keep his pay stubs, but he did. So we had to run him for the year. And it was just that easy because you just hit print. The difference between delete and void is delete will remove it from the check register as if It never happened. Void will keep it in the check register, but mark it as not processed, meaning no funds were taken out on behalf of this check. I'm going to go ahead and click on edit. And we're back to this screen where I can make changes. And adjustments. So again, if you're at this point, after it's already gone through the paycheck system, I would be more inclined to delete it and start over or void it, either way. If you haven't printed it on the paper check and you still got the paper check ready to go, you can void it and you don't lose the check number. All right, so now we got a happy worker. One of our graduates got a job doing QuickBooks, and she had to run the payroll. And she called up, and one of the things we always say is if any of our students ever have problems, you can call us or send us an email, and we'll try to help you if we can. I like it because it lets us know what's happening in the real world, because we don't always get to see that. But she called up, and it was like 3 o'clock on Friday, and she said, "Oh, you got to help me. I can't get the checks to print. What am I going to do? It's a payroll checks, and they're going to all be mad at me. They're going to hate me because it's Friday, and they want their checks to go home for the weekend." And she couldn't get them to print. And what she had done is, you remember when we set it up to be printed, she didn't have that turned on, and so they weren't there. So all she had to do was turn the check mark on, and then it set it up in the queue. And then she puts the check paper in the printer and print, all done. And she says, "Oh, I'm so relieved. I thought they were going to kill me." And I thought, well, they wouldn't be, I don't know, like kill you, but they wouldn't be happy with you. And Monday, they're probably even be madder, but it's not your fault, a little thing like that. And then blame the computer. Say, "Oh yeah, this computer program, you know how computers are." And people, "Oh, okay."
She called somebody.
Yeah, well, that's the other thing too. She could have just run away. But with QuickBooks, I think you saw it when I was working on setting up payroll. They did have the option to contact somebody, and you can do that. There's a fee, but there is somebody at the other end, and they are supposed to know their stuff. So you can do that. The other thing you can do is put your question into Google, and 8 times out of 10, you'll probably get the answer, because what's happened to you has happened to somebody else, and they've talked about it, griped about it, or asked somebody about it on a public post, and somebody's answered it, and you get the answer that way. So, let me just show you. There is a little trick in Google. When you're searching for something like that, like, why won't my paychecks print in QuickBooks? So here's from Intuit themselves, troubleshooting printing paychecks. So you can see here, and then they give you suggestions. And then this is the online version. So you do have to kind of watch that, by the way, is make sure you're looking at the right version. But you can thumb through these. The other thing you can do is, if you're not satisfied with your answers, is put quotes. What quotes in a Google search will do is make that phrase part of the search results. So when I run it, you'll see it changes a bit. Like, here's solved problem. So using those phrases, and then anything that you see, like in our case with QuickBooks, try to incorporate those phrases into your question. It'll give you better answers. So like, if payroll or paychecks didn't come up, I would use the word payroll, because that's what QuickBooks calls it, is payroll. So try that and see how that pops up. So any questions on the payroll? It's just a quick overview of how payroll works in QuickBooks. The general rule in payroll, if you're going to do just payroll for a company, you should be a good people person, because they a lot of times for human resources and payroll, you don't really see the employees in a good. Usually they don't come in and say, you know what, I got my paycheck Friday. I just want to tell you thanks. You guys are doing a great job here. More than likely it's wrong. How can it be so wrong? What happened? You know, they're panicked and it's about money, so they're worried. So you have to be a very calm, collected person and good with people. Say, let's take a look at this. Yes, that shouldn't have happened. Let's take a look and see what we can do here. Let's get this fixed for you, and that type of thing. So and you know, payroll can get kind of dicey. As you saw, there's all these different influences on payroll. And when I worked for, again, the County Office of Education, they had the rule was for teachers, they spread out the payments over 12 months, even though they only worked 9 months of the year. I got summers off. So they did have some crazy rules going on. And one of my coworkers' sister worked for the county, and she got, I think it was an extra $1,000 in her paycheck. She thought, great, I got a raise or something. She didn't know about it, but she got it. So she went out and spent it. So she got a call like a couple weeks later, and they said, you know, we were reviewing things. We made a mistake on your paycheck, so we need that $1,000 back. That was an error. And she's like, what? Well, what is your mistake? And they said, well, didn't you wonder why you got extra $1,000? And she said, well, I just thought I got a raise or something. And they said, well, either way, it was a mistake and we need it back. If you don't want to pay it now, what we can do is take out $100 until it's paid off or something like that. And so she was quite upset. Said, I don't think I should have to do that. I think it's your mistake and you should have to eat it. But no go. So now so the rule is, whenever you have a question about your payroll, definitely call up and find out what it was. Even if it's in your favor. Sometimes people say, well, it's in my favor, and I tell them, but they'll take the $1,000 back. So that, you know, might be true, but better now than later on when after you spend it, you don't really want that to happen. To be fair to her, though, when I did finally leave the county, it was a closed shop, so we had to be part of a union. And my union went first in negotiations that year, and we didn't get any. And they had a big meeting, and all the people were mad. I didn't really go to the union meetings, but that one I wanted to see. I wanted to see what happened and if it was going to be a riot. Because they went up to this big retreat in Asilomar, and of course the union people got wined and dined. But they come back and they say, sorry, everybody, we're going to have to accept nothing. So sure enough, everybody's mad. But they did, I heard this, they said something, and they were saying what happened. But you know, we were the first union, and we're not very strong, but the teachers union is coming up, and we did get a Me Too clause in the contract. So the Me Too clause meant that, all right, we'll accept 0, but if you give a percentage increase to any other union you bargain with, we get a retroactive increase, same percentage. Okay, done deal. So then when I left, like about 3 months later, I got a check in the mail. I thought, well, that's odd. I haven't been there for 3 months. Why'd I get the check? So I called Human Resources, and they said, what happened was your payroll did have that Me Too clause. The teachers union got a 3% raise or whatever it was. So everybody got a retroactive raise for however many months have passed under that clause. And so that's your raise. I said, I got a raise and I don't work there? And they said, yep, that's the way it works. I said, all right, I'll take your word for it. And went ahead and spent it. So see, it could, as much as you'd say, well, why would you get $1,000 and just assume you can keep it? No, it's not that, not that far off when they're doing all those calculations anyway. But it never hurts to ask. Speaking of asking, are there any questions on it? Okay, so let's try it. So now that you've got the payroll set up, you only have to do the payroll set up once. Once it's in there, like with the EIN numbers and everything, you don't have to do that again. So let's practice it. We're just going to do the employee part. So you can make up the employee. So add one new employee. And then their hire date is last week. So they can pay them for this week. And then run payroll for that employee. Now what's going to happen is you're going to see that the one we just set up now already has a paycheck for that period. So you won't be able to, well, you can, but it won't include her unless you tell it to. So it will know that you already have an employee paid for that period. So I'm going to do that now. Click on payroll and employees, or you can go up here to new and click on payroll. And I'm going to click on add an employee. Just put the name. So I'm going to make her hire as of the 8th. And then once again, you can choose if you want to, how much you want to pay your new employee. You can do the same or something else. I'm going to use my every Thursday hourly. I'm going to keep it the same so they don't find out and fight. I'm not going to use any deductions this time. I do want to change that direct deposit to paper check. So I have to turn off ask employee to enter their personal tax. It defaults to that. So that way I can do it on Frank's behalf because he doesn't really exist. Can make up a birthday. This one I want to make married filing jointly. Oh, I misspelled my city and it got all upset. Got Frank set up. When I select my pay period, it's going to turn off IMA. So you'll see, it says here that it found she already has a check. However, I do have the option of creating another one for the same time period. That'd be kind of strange to do so. So it's just Frank. Again, the QuickBooks defaulted to my checking. So that's good here. So I can either preview them or assume it's got it right, click Submit Payroll. And I can go to my checking account. And there we go. There are my two paychecks. So one question is, why is IMA's check different than Frank's if they're paid the same? Well, I set Frank up as married filing jointly. So his deductions are different. So just because they're paid the same doesn't mean they get the same amount. No, net on the gross, it might be the same, but net will be different. So we're done with that. We are done for the night. You can see here, when I go back to payroll, and it shows you the gross, they were paid the same. But that's the power of withholding and the deductions. A good old W-4 form.
Everybody waits till midnight and then they get their deposit.
That's right. The stroke of midnight, a lot of stuff happens. You're welcome. We'll see you Monday.